أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Welcome to our 12th class. Inshallah, we'll try to finish chapter 9 today. We're going to discuss our last sampling technique, which is the classical variable sampling technique. And I'm going to go through the steps. If you have any questions, please stop me and ask. And then I'm going to give you the plan for what we're going to do next, inshallah, after the finishing of chapter 9. So let's start. We have in classical variable sampling the use of the normal distribution theory. So in classical variable sampling, it's assumed that the distribution of the population is normal, meaning it has a bell curve, fewer distributions on both end, and fewer items on both end of the distribution, and more in the center. So, for example, let's say you have 30 students in a class. Few students will have A and F. A few more would have B and D, and then a lot more would have C's, which is in the middle. So it uses the normal distribution theory to evaluate the characteristics of the population, and it's commonly used to estimate the size of a misstatement. So just like we did in monetary unit sampling, the size of a misstatement, how big the misstatement is, depending on the sample that we test. So classical variable sampling and monetary unit sampling, they can both be used for the same purpose. When we discuss the advantages and the disadvantages of classical variable sampling, you'll know that in some cases MUS is more applicable. In some cases, monetary unit sampling is more applicable. So let's start with the advantages of classical variable sampling. The first one says, when relatively large number of differences between book and audited values is expected, classical variable sampling, CVS, will result in a smaller sample than MUS, monetary unit sampling. What does this mean? It means before you start the audit as an independent external auditor, you think that there may be a lot of errors in this. If you feel that way, then classical variable sampling method, when it is employed to calculate the sample size, you will get a smaller sample size. And as auditors, we would like to have smaller sample sizes. Smaller sample sizes that are representative are better than larger sample sizes that are representative, because it reduces our work. Smaller sample sizes reduces our work, and remember, we're selling time as auditors. The second benefit is it is effective for over and understatements. So remember, in the monetary unit sampling, the sample sizes are selected based on the sample items are selected based on the size. So the larger the size is, the more probability is higher of that item getting selected in the sample. But in the case of classical variable sampling, there is no such thing. Over and understatements, so if you have a positive error and you have a negative error, both can be detected. Okay. The third one is the selection of zero balances does not require special consideration. So remember, in the monetary unit sampling, if you have zero balances, you have to select those balances separately. The reason is monetary unit sampling goes after the larger balances. So your sample items would naturally go, it would be made up of larger balances. Zero balances you have to select separately. Just because a balance is showing zero, the account is showing zero balance, does not necessarily mean that there are no errors. There could be a $10,000 error in a zero balance. Maybe the balance should be 10,000 and it's showing zero. In the classical variable sampling method, you don't have to select those 0 items separately. Your sample would automatically pick some 0 items, or they have the probability of getting selected. Okay? You can stop me anytime to ask me a question if you're not understanding, okay? The disadvantages of the classical variable sampling are as follows. The first is it does not work well with little or no misstatement expected. So if you're not expecting a lot of misstatements, right, this is not a good method to use because the formulas and the calculations do not work very well. In the case of monetary unit sampling, if you're expecting fewer misstatements, that is a better method to use. So this is a disadvantage for classical variable sampling if you're not expecting many misstatements. The second is standard deviation has to be calculated. So here, and I'm going to show you the calculations in just a few minutes, there is an extra step of calculating the standard deviation, and we will go through that, which you don't have to do in the monetary unit sampling. And the third disadvantage is if few misstatements are detected, the projected misstatements and confidence limits are not likely to be reliable. Meaning, let's say you start the audit and you think that there would be a lot of misstatements, and you finish the audit and you do not find a lot of misstatements, and then you complete the calculations in the process, the calculations are not likely to be reliable because the calculations depend on a large number of misstatements to be found. Okay? All right. Now let's go through the steps. The first step is to define the sampling unit. The second step is to determine the sample size. And the third step is calculating the results. So let's start with the first one. Defining the sampling unit. Just like monetary unit sampling, this could be a customer account, right? This could be a customer account, just like Marva or Good Hospital or AXA. It could be an individual transaction. So it could be an individual sale, for example, a sale to a particular customer. Or it could be a line item. Line item means a line item on the financial statement. It could be a transaction which has a number. So one line from a financial statement you can pick, and you can see whether this line, the balance in this line is accurate or not. So this could be a unit, right? This could be a unit. So individual sampling units make up your sample size. So these are examples of the sampling units. In auditing accounts receivable, so for a more specific example, if you're looking at an accounts receivable, the sampling unit could be a customer's account balance, just like we did in monetary unit sampling, Good Hospital, Marva, AXA. An individual sales invoice included in the account balance. So it could also be an individual sales invoice that you could look at. And let's take a look at a sales invoice, how it looks like. Here, you see on your screen a sales invoice, and you can zoom in if you're not able to see this. This is, you remember our client, Men and Boys Incorporated, in the example that we looked at in the previous class, the customer of the client, right? What is the name of the customer of the client? No, that's the client, right? That's the client, right? The name of the customer of the client, let me show it to you one more time. me show it to you one more time. Uh, Here it is. What is the name of the customer of the client? The client is men and boys. Who is the customer? North Supermarket. Very good. Okay. Now, this sales invoice, right? This sales invoice is something that you could select as a sample item to verify this number right here. As you see at the bottom, if you zoom in, you would see 1615, 1615. This could be a sampling unit for you to verify. Okay, so let's go back to our slides. So here it could be a sales invoice included in the account balance. So these are examples of the sampling unit, just like the balance on the balance sheet of the customer, Sharat. The sales invoice could be one unit of sample that you could check. So just like we are verifying the balance of an account, we could verify the balance of that sales invoice. Is that clear, Sharat? Right? Don't worry about the amount, right? Whatever the amount is in the sales invoice, it's this was 1615. It could be any amount, but the sampling unit example is if you have a sales invoice like the one you were looking at, right? You could select that as a sampling unit. Does that make sense? That is correct. That is an option. Okay? All right. All right. Now we go to the next stage, which is the sample size calculation. Here, the formula is you look at the population size based on sampling units and not the population book value. In our monetary unit sampling, we looked at the population book value. Remember the $2.5 million or $3.7 million, etc. Here, we look at the number of items in the population, number of units we have. So number of accounts, for example, right? That's the first thing. The second thing is confidence coefficient, which will come from a table, and I'm going to show it to you. The third thing is the standard deviation. For this first calculation of determining the sample size, the standard deviation is going to be provided. It will be given to you. The tolerable misstatement, everybody should know by now what that is. And then the estimated or the expected, same thing. Estimated or expected misstatement is going to go here, and you're going to take a whole square of this thing to calculate the sample size. Now remember, we are only just calculating the sample size to see how many items you're going to select from the population to audit. Okay? This is the table where you pick the confidence coefficient from. So if our confidence level is 95%, the confidence coefficient is going to be 1.96. 95% confidence, desired confidence level means we want to be 95% sure that the sample is representative, which means we have a 5% sampling risk. If that is the case, our confidence coefficient from this table would be 1.96. Okay? Then we come to the sample size calculation. So these are the raw data that you need to do the calculation. The first one is accounts receivable includes 5,500 accounts with a book value of $5.5 million. So in this formula, we're going to use the number of accounts and not the population book value. The number of accounts here is 5,500. The tolerable misstatement is plus minus 50,000. Now, why we have plus minus 50,000? In the classical variable sampling, we have either we could go a positive $50,000 error or a negative $50,000 error. So let's say the the accurate balance should be 100,000. We can tolerate up to 150,000 or as little as 50,000, right? So 50,000 more or 50,000 less than what the accurate balance should be. And then expected is 20,000, which is given. The confidence coefficient, which is 1.96, comes from the previous slide right here, 1.96, because our desired confidence level is 95%. So we take that number from there, and the standard deviation is given. It will be given to you for this calculation. Now remember, there are in the entire sampling discussion in the 2 chapters, there are only 4 or 5 formulas, and you need to remember these formulas, okay? So we have the first item, which is the number of accounts, 5,500, times the confidence coefficient, which is 1.96, times the standard deviation, divided by tolerable minus expected, and then whole square. If you do the calculation, it will come to 125. What is 125? 125 is the number of sample items that we're going to select. So now we are ready to start the audit. All of this that we have done so far is to select the 125 items that we're going to, 125 customers that we're going to send a letter to, asking them whether the balance is accurate or not, right? So for every one of these customers, we're going to send a letter asking the client's customer, is this balance accurate? Can you verify this balance? And this is the letter that I showed you in a previous class, right? So you have to send, and of course we cannot do that as a practice here, but let's say we did send 125 customers letters, and they sent us back. We find that 30 of those 125 accounts contain a total misstatement of $330.20, meaning we have some customers with a positive error, some customers with a negative error. So we could have a positive $200 error, right? We could have a negative $150 error. We could have a positive $75 error, right? 475, we could have a negative $300 error. So the error could be both ways. The expected error is not positive. The expected error is also 20,000. It's an ultimate number. Okay, it's an ultimate number. So the ultimate number, it comes out to be positive. You follow? Because we have the plus and minus, and you will see we will take a square of it. It will make sense to you in just a second. The expected number is not only positive. It is also, it could go both ways as well. Okay. Now, this 330 is made up of positive and negative numbers. So we have a total misstatement of $330.20. We have a $330.20 total error in 30 items. So now we selected 125 items to audit, and we found a total error in those items that we audited, $330.20 error. So that means if we want to calculate the average error in each one of those 125, we have to divide the $330.20 with the sample size, which is 125. So when we look at 125 items, we find that the average mistake in each one of those items is $2.65. The mean statement for each item that we sampled is $2.65. So far so good. They could equal 0 theoretically, but it is never the case, right? In theory you could have a 0, but it is never the case. Okay, if you ever find it to be 0 in your auditing, give me a call, inshallah. Okay, I'll tell you what to do. Okay, all right. Now we are going to take this 2.65 and we're going to project it into the population. So we have $202.65 for each item, and we have a total number of items in the population, 5,500. So if we want to see what is the projected misstatement in the population, we'd have to multiply the $2.65 with the 5,500 to get the 14,575. So this is our projected population misstatement. So far, so good. Okay, so now we have only 3 slides left in this entire chapter, and this is also one of the difficult points in the entire course. So follow along very carefully what we're going to do next. We have this projected population misstatement that we think is in the population. Next step is we have to calculate something called a standard deviation to complete our entire calculation. How is this calculated? The formula is as follows. So we have the total squared audit differences. I'm going to come to what this means. We have the sample size times the square of the mean differences. So the sample size is 125 and the mean difference is $2.65. So we'll take a square of that item only, not a whole square. Okay, just take a square of this item. And in the denominator, we have 125 minus 1. We have 125 minus 1. All right, sample size minus 1. Now, in statistical terminology, there is a name for this. Right, sample size minus 1. There is a name for this. Let's see if anyone of you know this. It's not necessary for you to know, but I just want to see if anyone knows that. What is this called? Sample size minus 1. There is a name for it in statistics. Anybody knows? Anybody remember? Does degree of freedom sound familiar to you? Degree of freedom. Have you ever heard of something called degree of freedom? Degree of freedom, right? Degree of freedom. So n minus 1 is degree of freedom, okay? But it's not, if you don't remember, don't need to remember. It's not something that you need to know. So the bottom is, for our purposes, for other courses you might. So for sample size minus 1 is the denominator. Now this number right here is the total squared differences. Now if you go back up, you see that 330 is made up of, I said, positive and negative numbers. So positive 200, negative 150, positive 475, negative 200. Like that, you could have positive and negative numbers. If you square those individual numbers and you add them, you will get a number like this. Obviously, I'm not going to give you 30 numbers to square and add in the exam. This number will just be given. But where does this number come from? This is the squared. As soon as you square, there is no longer a negative number. All numbers become positive. So if you multiply a negative number with a negative number, it becomes a positive number. So if you square any number, it becomes positive, and then you add them, you come to this number, total squared audit differences. What is the logic behind this formula? We don't want to get into that. We want to only be applied statisticians when it comes to the auditing. So we need to know what the formula is. We need to remember, we need to memorize and remember what the formula is, and then we need to know, where do I get this number from to plug it in here, right? We are not here to do statistics for the love of statistics. We want to conclude, is this account fairly stated or not fairly stated? Are you following? So we do this calculation and we come to $16.83. This is the standard deviation. We need this number to do the next calculation. Okay, what is the next calculation? We need to do a calculation to figure out something called a confidence bound. A confidence bound. How is this calculated? The formula is population size times the confidence coefficient. Now the population size is 5,500. This is given to us, as you know. The 1.96 comes from that table we looked at, because our desired confidence level is 95%. So this 1.96 comes from this slide that we looked at right here. Right here. So this 1.96 comes from this table, because our desired confidence level is 95%. We put that there. The standard deviation is 16.83, which we just calculated. Divide that with the square root of the sample size, which is 125, which we also calculated 2-3 slides back. If we do the calculation here, we're going to get a number which is called the confidence bound. The number that is called confidence bound, what do we do with this number? We're going to discuss next. That number is 16,228. All right? We take this number and we add that with our projected misstatement and we subtract it from our projected misstatement. So do the calculation first, add it with the projected misstatement. Add 14,575 and tell me the number with the 14,575 plus 16,228. What is that number? Tell me quickly. $30,803, right? Okay, so that is positive 30,803. Now do the negative 14,575 minus 16,228. Do that calculation. And tell me the number. 14,575 minus 16,228. So it's negative 1,653, 1,653. So now our confidence bound in the positive side, the confidence interval in the positive side is 30,803. And in the negative side, it's 1,653. What do we take? What do we do with these numbers? We take them and we put this in this continuum. So we have the tolerable misstatement. It could be 50,000 plus, it could be 50,000 minus. When we calculate the confidence bound, the upper limit is 30,803 in the plus side, and the lower limit is negative 1,653. If these two numbers, the positive number and the negative number, both of them fall within the plus minus 50,000, then we will say that our account is fairly stated. If one of these numbers go outside the bound, we would say that the account is not fairly stated. All right? Now, I know that we have gone through two heavy chapters, chapters 8 and 9, and it has a lot of information, a lot of stuff, and all of these lectures are also recorded. So what I'm going to do is I'm going to give you a pause so that if you're a little bit behind, you can catch up. So take the weekend and study chapters 8 and 9. On Sunday, I'm not going to start chapter 10. Okay? I'm going to give you an opportunity to ask me if you have any questions, any difficulties, anything you want me to explain to you differently, anything you want me to explain to you again, give you some more explanations on any concept. Sunday, we're going to do that, inshallah. And then next Tuesday, we do not have any class because it's sports day. So you have one whole week between today and next Thursday before we start chapter 10, and no new material is added between now and next Thursday. This whole week you can study these two chapters. The quiz on both of these chapters is the following Sunday. Okay, so I'm giving you ample time. If you prepare for that quiz very well, studying these chapters 8 and 9, and you have the opportunity to ask me questions on Sunday, so you have this time to prepare. This will prepare you for most of the midterm, because there is only one more chapter in the midterm, that is chapter 10. Okay, so you have this time. Don't lose this opportunity. Take this opportunity. I'm giving you this pause so that you can do well, inshallah. Okay, don't just take this and lose this opportunity. Are you following? Are you with me? Is it clear what I'm asking you to do? Okay, so I'm going to stop and not start chapter 10 until next Thursday. You review and you ask questions if you have any difficulty on Sunday, inshallah, and then you have more time to study. Thursday I'll start chapter 10, and yet I'll give you the next weekend as well before I give you the quiz, inshallah, which is the following Sunday. Mazboot? Okay. All right then. I know if I ask you if you have any questions, you probably won't, because you need to study this a little bit more to understand. But nonetheless, do you have any questions? You can ask me if you have any questions. All right. Tayyib. Thank you so much. Have a good weekend. Study, inshallah, and I will see you Sunday. I'm expecting good questions, inshallah. Okay. You're most welcome. Have a good weekend. Assalamu alaikum wa rahmatullahi wa barakatuh.